John Nadler, what's your outlook for gold this summer? It seems like we've been range bound and we're going to stay that way.
Well, it seems thus far that would be the case. However, these thin markets could surprise us any given day at any given moment because obviously with very thinned out participation, any type of impactful news, be it from the EU or from the U.S. Fed, could make for outsized moves. For the moment, I think the bias remains to the downside. We keep testing around the $1,550 level in gold. And of course, silver must maintain the mid-26 level or else it could also suffer some sell-off. Participation is, basically characterized as the summer doldrums here. But so long as the dollar remains the, vehicle of choice for safe haven seekers out there, I don't see too much in the way of a bull move. And of course, I think the only hope or the only carrot that the bulls are looking for is for some type of a Fed give, which I don't think is likely to come until anytime around the Jackson Hole or possibly the August meeting of the FOMC. So let's just call it about 15.25 to 16.25 for gold, and probably somewhere between 25 and 28 for silver.
So if the Fed stands pat and the Europeans continue to kick the can down the road, is there anything at the margins that can help move gold, whether it be at China or India? India, for example, is stopping gold coin sales at their banks. Will this have any effect on the metal?
Indeed, it could have an effect because even though the tonnage in question here in form of gold coin sales at these banks is probably only about, 2.5 million ounces, the symbolism behind it, i.e. the resolve of the Reserve Bank of India to curb the country's current account deficit by slowing down gold offtake is very significant. They've already managed to some extent to curb demand in that country by their job owning and, of course, by raising the import duties earlier in the year, some of which were rescinded later. But lo and behold, the April and May imports, which were well over $9 billion a year ago, are now roughly half of that for the same period. So indeed, this is a gesture that is definitely important, and it bears watching. Because, at the end of the day, banks in India were allowed to sell gold 4 years ago because there was an excess of dollar flows. Now they got the opposite problem. They got a rupee that has fallen 30% since August. And they'll do pretty much anything it takes to curb the current account deficit. And they've identified the two principal culprits of the situation as being gold and oil imports. So it bears watching because this is the physical market's, pillar component.
This market is
stock tickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to